Alright, so in this video, let's look at part 2 where we discuss mortgages and insurance. Well, and this one is insurance and this is part 2. So let's say, just to recap quickly, Tom has a mortgage of $1.5 million, so he took out life insurance for $1.5 million. But remember that key point, the bank is giving Tom this mortgage based on his ability to repay. So what will prevent Tom from ability to repay? If Tom passes away, the life insurance will cover the mortgage and clear off the debt. But here's something people don't take into consideration. What if Tom gets cancer, or Tom gets a stroke, or Tom gets into an accident? What is the recovery period for a cancer, stroke, or any other major medical issues? Now for a stroke, it could be days, it could be weeks, it could be months, or it could be years. It depends on the individual. For cancer, for every 1 month you spend in recovery, you need 2 months to recover. So these things could have you down for between 6 months to a year. Now, what could happen if it is you have to go on sick leave for that duration or that period? So I want to dive deeper and explain medically unfit situation. Now, if it is you are diagnosed with one of these things, your first option is to go on sick leave for 2 weeks, and this is paid sick leave, right? Paid sick leave is normally 2 weeks for the year. Your second option would be to apply for extended sick leave. Now, if the company can afford it, they can pay you in that extended sick leave, or they could pay you half your salary. That's also possible, right? But if the company cannot afford it, you will have to go on unpaid extended sick leave, right? Now, think about that. You have a major medical issue and now you're not getting paid. Does term mortgage payments stop in a situation like that? No, it doesn't. Does term health insurance pay the mortgage while he's not getting paid? No, it doesn't. One of the number one cause for bankruptcy is medical expenses. So, one of the things I tell clients that even if it is you have a mortgage of $1.5 million, and yes, you have the life insurance of $1.5 million, as much as possible, you need to take out a critical illness or accidental insurance plan for almost the same value as the mortgage. Why? Because if it is you're diagnosed with a major medical issue, you'll have enough money to cover, yes, your medical expenses, but you could pay the mortgage for 2 years, 3 years in advance while you recover with dignity. And that gives you a peace of mind so that your bills are being paid. You're not stressing on top of dealing with a medical issue. Now this is part 2. I hope you guys continue to follow. Stay tuned for part 3 in terms of mortgages and insurance policies.